Hey all, welcome back to Invesfinc. Wondering how to tackle the markets tomorrow, June 6th? We are going to unlock the key support and resistance levels for Nifty, Sensex, Banknifty and FINNIFTY, giving you the clarity you need to trade smarter. Plus, make sure you stick around to the very end, as we would be revealing our detailed analysis on Thursday's buzzing stocks and will also discuss potential strategies for them to trade in tomorrow's trading session. So don't miss out on this. Before we jump on to the details, please go through the disclaimer. Now let's begin with the analysis on all the indices. First up is Nifty 50. So in fact, today was the expiry session for Nifty 50 and it was quite optimistic to consider that there would for sure be volatility. And in our yesterday's video itself, we had alerted that expect some volatile moves to come in, considering the fact that we also have the RBI meet in tomorrow's trading session. So the operators would prepare enough to place themselves in the right bets, and that was the reason why we saw volatility. So markets opened slightly flat to gap up, and then from there it hovered in range bound kind of scenario. After maybe around 11 o'clock, we significantly started seeing the rally, and this rally continued until 24,900 odd points. So we started with 24,690, roughly around 20 to 30 odd points from the previous day's close, and then we saw a significant highs until 24,900 odd levels, and then that immediate rally was crushed, and we further came back towards 24,700 odd levels, and then towards the end again there was a recovery, and finally we closed at 24,750 odd levels, which is still quite bullish and positive note on which the Nifty has closed. So 0.53% was the move that we had seen yesterday. So now, given the fact that we know tomorrow is RBI policy, and the expectations are that there would be a 25 basis point rate cut. If there is a rate cut of 25 basis point, and at the same time there is a positive stance from the RBI governor, then we might see a rally continuing from the yesterday's or maybe from the today's downfall that we had seen from the highest levels or the high levels of today. So we might see this rally getting continued, and that would act as a base or foundation for tomorrow's further next leg of up move. In case if we see a rate cut but there is no positive announcement, then the overall market participants would turn bearish, and we might see a reversal also coming in the tomorrow's trading session itself, which might lead or continue the Nifty towards 24,600 to 500 odd levels. If there is a surprise cut of around 50 basis point, then we might significantly see around 2% jump too. So we have to be placed based on these all kind of scenarios. So the major expectation is just a 25 basis point rate cut and a positive stance, provided if there is inflation being stagnant, then we should be in the expectation of further rate cuts happening towards the end of the year. So that is what the headline news that all the market participants would want to hear. But yeah, let's see. So overall for us, the positive stance on Nifty would come immediately after we start trading above 24,800 odd levels. In fact, in today's trading session, we went up towards those levels, but then it could not sustain, and significantly we saw the drop of around 150 odd points from the highs. So once we start trading above 24,800, that should be considered as positive, and then the longs can be opened up for the next leg of up move towards 25,200 odd, and then from there, if it sustains, we might even see until 25,500 odd levels in the coming days to weeks. On the lower side, the first support for us is going to remain at 24,500 odd levels. Now let's see from the perspective of open interest. So since we had expiry and this is the first day where the positions have been taken, so it's a no-brainer to further discuss. However, what we can very clearly see is the major resistance or the bets that people are putting out for the next week expiry is Nifty might not cross beyond 26,000 levels. That is when there have been heavily calls that are shorted. Roughly around 60% of calls have been shorted alone in today's trading session. Same way on the lower side, 23,500 would act as a strong support, and that is when roughly around 45 to 50% of open interest positions got built up. So we have a range of around 2,500 points for the next weekly expiry on Nifty. However, we would majorly be trading in the range of 24,000 at max on the lower side, and then 25,500 primarily, at least for this week, on the higher side. So for us, it is like a 2,000 point kind of range, or maybe maximum 1,500 points kind of range in which we would hover for 12 June expiry. On the PCR front, it is 0.7 overall and 0.8 at the money. Both looks bullish. Next up is Sensex. So even Sensex, we had seen a significant rally coming in, and this would surely act as a strong support now, around 81,500 odd levels. So as long as we start trading above these levels, then that should be the first trigger for us to go longs. And the immediate resistance would come in as 82,500 odd levels, from where we saw the sell-off coming in. Once we cross those levels, then we are open for 84,000 odd levels in the coming weeks. On the lower side, for us, 80,600 to 700 would act as a strong support, because today as well, despite kind of pressure from certain stocks on Sensex that we had seen, that was not letting the further up move. But there are rare possibilities now with the kind of positive announcements that are expected to come. We again going back around 80,500 to 600 odd levels, at least in the near term. So keep the strong stop losses at these levels. Once this gets broken down, we might see a significant fall, which might even lead towards 79,000 odd levels. On the long side, 82,500 should act as first resistance, and further up, if that crosses, we might approach towards 84,000. Now on the open interest perspective, so we already see a huge unwinding that had happened for the 81,000 calls. So now majority of the open interest positions have been either moved to 81,500, 82,000, or even 83,000 odd levels. So as you could see, we do not see significant resistance around or beyond 82,000 odd levels. So if there is any positive outcomes that we see because of RBI rate cut announcement, then we are headed towards easy jump for 82,000 levels primarily, and after that, if that level takes a strong support with significant open interest positions being built from the put writers, then we would head towards 82,500 as well in the coming days. So keep a close watch in case if you have the shorts being taken. So it is better to be on sideways and can significantly enter with whatever direction the markets are heading towards to capture the rally after the RBI announcement. So PCR stands at 0.8, which is positive. At the money is quite bullish, trading at 1.03. This could be majorly because of huge open interest positions that were built at 81,400 from the put side, and also some positions is added on the call side too. Now moving on to Bank Nifty. So Bank Nifty, despite the kind of positivity that was seen in Nifty as well as Sensex as part of major indices, we did not see that bullishness coming in on the banking stocks though. So overall, Bank Nifty, just closed 84 points up compared to previous, close, trading with 0.15% up. But still, we are on a uh, we have closed on a positive note. So this is the zone where we had been, taking a lot of support around 55,500. Now that we have closed 260 odd points above those levels, that should be considered as a trigger and a further leg of up move. And in case if you have noticed or closely watched, today, despite the volatility, we did not see Bank Nifty trading below 55,500 odd levels. So 55,500 has been acting as a very strong support from almost like 6 odd trading sessions. And each time we trade below that, we see significant, buyback from the lower levels is happening. So that gives a kind of positive sentiment that Bank Nifty is headed for the next leg of up move. And the first trigger for us should be around at 56,000 levels. Once we significantly take support at those levels, or maybe consolidate for few days at those levels, then we could see easily a next leg of a rally to come in, which can lead the Bank Nifty towards 57,500 or even at 58,000 odd levels. Now let's see from the perspective of open interest. So 56,000 levels on the call writing has been very strong from the beginning of the June series itself. However, there is a good strength or built up of positions even from the put side. So until we do not significantly cross 56,000 levels with good build up of put positions, till then we will have to remain cautious. But once these levels are crossed, we do not have any significant uh, writing happening or build up of positions, which will lead to a one way kind of rally directly that will hit at around 57,500 odd levels to 58,000 levels by the end of this June, if everything goes smooth, be it from the RBI policy announcement, and then banking stocks also performing or doing really well. From PCR fund, it is zero point 0.8 and overall and 0.86 at the money, which is again slightly bullish. Lastly, it is FINNIFTY. So FINNIFTY in fact has traded on a positive note in today's trading session. So we touched towards the lows of 26,229, which was the kind of where the previous day we had taken as a support or closed around those levels, and we opened slightly gap up, and then we came down after a significant sell-off in the major indices, and then from there we further rallied to the highs of 26,500 odd, and towards the end of the day there was a sell-off that came in, which led to a close towards 26,400 odd levels. Still, it is closed at a positive note with a jump of 0.47% in today's trading session. So next for us would be the first trigger as 26,600 odd levels. Immediately you can keep your long buys at these levels. Once you see long positions or like long calls or call buys at these positions, once you see this level getting crossed, immediately your trade should trigger on the long side, and this up rally can continue until 26,800 primarily, and if we take support towards the zone, then we might see a further rally towards 27,500 odd by the end of this monthly expiry. On the lower side, for us, 26,300 to 26,200 acts as a stiff or strong support, because each time we have come or approached towards these levels, there have been significant support that we have got, and then buying momentum got created. Now if sellers bypass this and sell off heavily, then that means there would not be buyers further coming in, so they would wait and watch and start buying at the lower levels. So we might see a sharp downfall even. So yes, we have to remain cautious and keep a strict stop loss at 26,200 odd levels. Now moving on to open interest. So as you could see, there is some either leak of information or some positive long bets taken by the traders, and that is when, if you see 26,500 calls, there is good unwinding close to around 20 to 30% odd. Similarly, at 27,000 odd levels, which is roughly around 600 points away from this present level, still we see unwinding of positions to the tune of 35 to 40 odd percent, right? Which is quite significant, and we do not have any resistance until 27,000 odd levels, right? So if there is a positive stance from RBI, then we would see a significant run up or buying happening in the financial services stocks. So have a close watch and do not carry or hold your shorts provided if there is a positive announcement. Now on the PCR front, we are trading at 0.7, which is slightly bullish, and at the money it is 0.86, which is significantly positive. Now the next segment that we would be discussing is the participation by the market players. So typically the FIIs who have been playing a dominant role in our markets. So on index futures, they are continuing with their short positions with 1.07 lakh contracts. On call options, FIIs have went long with 1.22 lakh contracts. However, they have covered or hedged their positions by taking long put options to the tune of 1.67 lakh contracts. So net FIIs have taken 45,000 to 69 contracts on a short side. So they are not at all bullish both on index futures as well as on index options. Proprietary traders, on the other hand, is mildly holding 771 future contracts towards the short, so which is not that significant at all. On the index options, they have heavily shorted in today's trade, and they are just carrying around 51,000 odd long positions on the call options, and then to hedge they have also taken long put options with 61,000 odd contracts. So proprietary traders have actually not been carrying any significant positions. Could be because of the they would be waiting for the RBI news to come in. So it is just 9,500 odd contracts proprietary traders are short with. Now let's see retailers. So on index futures, retailers have been continuing with their longs to the tune of 69,000 odd contracts. On call options, they have shorted heavily with 1.74 lakh contracts, and on put options they have again shorted heavily with 2.39 lakh contracts. So net there have been a lot of positive bets that the retail traders have been taking, and they are long with 65,580 odd contracts on index options. So FIIs and proprietary traders are mildly negative. However, client is quite positive and have gone on the long side. DIIs have in fact bought today again in the cash market to the tune of 2,300 odd crores. At the same time, FIIs, however, have been away by pumping in money and have sold off 208 crores in the cash market. So we would see more action only post the RBI announcement after 10 a.m. tomorrow. Now comes the very important analysis or study. So the buzzing stocks. So today's buzzing stock on the longs is Hindustan Zinc. So we had seen upward momentum or a rise of around 5.04% on Hindustan Zinc, and in fact this stock was already in our radar, and 2 days before we have already covered with our analysis. So there was a clear indication that we had given during this day that we have approached towards the significant resistance level, and immediately if we see crossing this level, then we should initiate with the long positions, because there is high potential for this particular stock to move towards the levels of 560 odd. And why we stick with our analysis is because the silver prices in the international markets like COMEX has been seeing a significant surge, and this surge we saw on 4th June, as well as it continued to trade firm on today's trading session to 5th June. So there are also a lot of analysis or reports that indicate that silver is expected to hit multi-week highs. So as Hindustan Zinc is India's largest and one of the world's leading integrated producers of silver, so there is a direct beneficiary to this company with the rising silver prices. So the higher the silver prices, directly the company's revenue and profitability would get a boost, and it makes the stock more attractive to investors too. And technically on the charts we had already discussed that the stock has turned bullish, and we might gradually see it crossing all the resistance. The first resistance at around 520 odd levels, and then there would be a straight rally towards 560 odd levels, because we saw a kind of fall from these levels of around 15 odd percent. So we might see similar 15 odd percent jump on the higher side too. So that is what is expected on Hindustan Zinc. So you can take the longs and continue with your positive bets. But yes, immediate support for us would be towards these levels, around 450 odd. Now next stock on our radar today was RBL Bank. RBL Bank had experienced a decline of around 2.63% in today's trade, roughly around 5.58 points drop from the previous trading session. If you notice, the stock had approached the kind of resistance of 218 odd levels. So we had touched this level a while ago, and then last 4-5 trading sessions, that means the last week again we have touched twice these zones, and then since we were not able to significantly cross or move up, there was a selling pressure that was seen, and just in 3-4 trading sessions we have roughly dropped around 14 points. That translates to slightly 7 odd percent, right? So we have to remain cautious on the RBL Bank stock, given that if we close below these levels of around 202 to 204 odd levels, then we would see a sharp downfall coming in. Now the other way to look at it is we might hover and take a support at these levels, and since tomorrow is the RBI rate cut announcement too, which would if it remains positive, it would surely boost or pump the banking stocks, and then we could see that either the sudden reversal or a jump from these levels too, or we might hover and touch 204 odd levels, and then from there we could see a reversal which could lead to the immediate resistance of around 230, and then also around 245 odd levels. So keep a track of this particular stock, because in today's trading session there was no major negative company specific announcements, nor there was any regulatory action or management changes or any significant financial warnings that was issued by the bank's management. So the stock had seen a bit of recovery from the mid-Feb kind of levels, and there was one linear kind of rally that we had seen in last 3 months. So that is when the run-up overall has been roughly to the tune of 30 odd percent. Yeah, right. So that is when there is some breather kind of or the consolidation that is happening at these levels. If we cross above this zone, 218 on the higher side and 204 on the lower side, then we would see a significant either a drop or a jump from these levels. So remain cautious and keep a track by keeping the alerts on this particular stock. Immediately once you see this stock again coming in a positive momentum, we can go with the longs. So that's it with the today's analysis. So if it has brought value to you, please don't forget to hit the like button and share it with your fellow traders. So for daily market report updates, make sure you subscribe to our channel and tap to the bell icon so that you never miss on any episode. So thanks again for watching today's video, and we will see you in the next video. Till then, happy trading.